Hey everybody, Matt Graham, MBS Live here with you on Monday, April 20th, 2020. Bonds are mixed today, stronger for treasuries, weaker for MBS. A lot of this MBS stuff is a factor of the Fed's bond buying efforts or the changes therein. Last week, we had a pretty big adjustment, relatively, on Friday afternoon when the Fed updated this week's bond buying amounts. That came out at 2 p.m. You can see the results very easily in treasuries because they cut the amount from 30 billion to 15 billion per day. And then MBS were cut a little bit less, but they were already buying less MBS anyway. And that amount, if memory serves, is something like 8.9 to 10.6 billion, depending on the day. And if you're super duper interested, you can always find that stuff on the New York Fed website, and the PDF ends up looking something like this. So today, we had 31 and change, let's call it 3.2, 3.2, and then 4.3 billion. So these 3.2 billion operations are in 30-year fixed MBS. And if we go back to MBS Live, we can see that is when we had the sharpest downturns of the day in price, right after those operations ended. So the first one ends at 10:10 a.m., prices fall. Second one ends at 1:20 p.m., prices fall. Now, this isn't to say that prices are always going to fall when the Fed gets done buying, because clearly in the past, the recent past, the Fed has come and gone and prices have gone higher. So one of the reasons they're going lower now, two of the reasons. Reason one, they're not buying as much as they were. And then their absence of support is more palpable after these operations end, and it can be easily seen by other market participants as well, and it can be easily seen by us if we want to take a look at the published results that they put out on their website. For instance, in this morning's operation, sellers brought more than $9 billion to the table, 3 times the amount the Fed was willing to take. Then it was almost 4 times as much in the afternoon operation. So these are the biggest ratios of sellers to Fed buying that we've seen so far during the Fed's current buying campaign. And yes, a lot of that has to do with the fact that the Fed has simply lowered its buying amount so much, but it's also worth pointing out that origination is higher than it was a couple of weeks ago. So more MBS is being brought to the table in general, regardless of what the Fed is buying. So with the Fed buying less, it makes sense to see 2.5 MBS, for instance, moving down from these relatively lofty 104 plus levels into the mid 103s. And again, remember 103 and change, 103.26 was the previous all-time high back in the day that resulted in rates being much lower than they are right now. So, well, not much lower, but, noticeably lower for most lenders or for the average lender. So we can work with these prices. It's going to require margin tightening, specifically with respect to servicing valuations. And that's the kind of thing that is unfortunately just going to take time, and it's not going to be healed instantly by some servicer facility. And Ginnie Mae already has a facility out, and it's sort of proof positive. If you haven't seen FHA rates go right back to 2.75, then there's your proof that the Ginnie Mae facility is not instantly healing pricing. The same will likely be true for Fannie and Freddie pricing, and we will just have to wait to see what the uptake in the forbearance situation is, like how many people do it, and what the fallout is from a loan saleability standpoint. We're expecting FHFA to give some guidance on that, and that's a piece of the pie. The servicer facility is a piece of the pie, and then just time and unexpected fallout is another piece, because it's an unprecedented situation. People don't know exactly what to expect. So people don't know exactly how to value servicing. So therefore, servicing valuations will remain conservative until we see what's what. It's been the case from the beginning. The servicer facility has been not a red herring, but a pink herring anyway from the beginning. And once it is announced, if it's announced, then we'll be able to see just how true that is, I would imagine. So what does that mean for you from a lock float standpoint? Say that all that stuff is boring to you and you just want to be told what to do. Well, the same advice is going to continue to apply. Either you're in the market or you're out. If you're in and the rate you can quote works for your client and everybody's happy and ready to go and you can close the deal, it's better to be locking right now. And if you're out of the market, it's better to be ready to lock, making a game plan, talking to your client about what works, what rate you want to pull the trigger at, and then being ready to pull the trigger. And it's that simple. There's very limited opportunity to play the traditional lock float game just because of the disconnection between the normally connected things in the secondary mortgage market. You can't say at this point in time, hey, Friday afternoon was weak for MBS, and if we're able to hold our ground by Monday morning, then rates should improve a little bit because lenders would be conservative heading into that weekend. Yet here we are on Monday morning, and MBS held their ground, but most lenders were a little bit weaker on rate sheets this morning. A few were stronger, and that makes advice hard to give as well, because all we can really do is talk about the average lender. Things might be different for your lender, and you got to sort of take a look at where they are in relation to other lenders and how they're moving with MBS, how conservative or aggressive they've been relative to their own past precedent, and sort of adjust accordingly. So when you see a lender step out of their comfort zone in an aggressive way with lower rates, that can be a more compelling suggestion to take those chips off the table. Hopefully that makes sense. Let me know if it doesn't. Use the contact us link in the help menu. And remember, your screen's going to look different than mine right now because I'm broadcasting from the new version of MBS Live, which you'll have access to soon. That's going to do it for today. Back with you guys tomorrow. Have a great rest of your day.